Warren Buffett is a busy man, and we are always anticipating what new steps he takes to enlighten us on the mental workings of the business mogul. Here are the 10 recently purchased stakes owned by Warren Buffett. Restoration Hardware. Warren Buffett had found a winner in the RH and had bought an extra 1% share in the third quarter of the year 2020 to add to his already existing share in the company. This resulted in 1,732,548, which brings the stake value to a sum of over $800 million. The brick-and-mortar retailers, a competitor company to the RH, had struggled in recent years while the RH gained ground in the upper crust. The RH company has also found success catering to the work-from-home movement as Americans decided to upgrade their home offices and their homes in their entirety. The Bank of America global research analysts had rated the stock a buy and termed it one of the best long-term growth stories in our coverage. The report said, with several markets, high-end home growth, and company-specific growth opportunities, new galleries, RH ecosystem, international, we see a strong case for high, long-term sales growth and multiple expansion. This view broadly aligns with Buffett's worldview. This is a sure bet on housing and related projects. BristolMyers Squibb. BristolMyers Squibb was Warren Buffett's third quarter big pharma bets, where he took on almost 30 million shares with $1.81 billion. This isn't the end of it. Buffett had hiked the stock by another 3.4 million shares in the fourth quarter. This made up about 11% extra worth of the claim. The BristolMyers Squibb, which we would be referring to as the BMY, had grown squarely in a big way when it had acquired the pharmaceutical giant Saline. We suspect this purchase has to be a big part of the attraction to this stock. The deal had brought in a pair of blockbuster treatments for multiple myeloma, Polymis and Revlimid, the trade names for these drugs. The Revlimid also treats mantle cell lymphoma and myelodysplastic syndromes. Groundbreaking achievements right there. This long track record of successful acquisitions has kept the pharma company's pipeline primed with big-name drugs over the years. They are the better-known drug names under the pharmaceutical line, including Coumadin, a blood thinner, and Glucophage for diabetes mellitus. Buffett had seen the value of buying the BMY shares. Something good ought to be going on here. Abbvie. Abbvie is also a big city pharmaceutical company with a series of blockbuster drugs to accompany its name, and they are best known for drugs such as Humira and Imbruvica. However, analysts have stated that they are also optimistic about the potential for two other drugs, Rinvoq and Skyrizi, which treat rheumatoid arthritis and plaque psoriasis. This came as a shock to the UBS analysts who had not foreseen the growth these blockbuster drugs would bring, though their names slightly signify their worth. We are surprised to the upside by the magnitude of beats for key growth drivers Skyrizi and Rinvoq, but this might not have been the only motivation Warren Buffett had to go on and purchase shares in the Abbvie, and even going back for seconds. Let's talk about the Abbvie dividend history. Abbvie is what we call dividend aristocrat. How? Abbvie had earned this title by raising its dividend every year for nearly half a cent. You're yet to hear the best part. Its current 5% dividend yield is one of the highest in the S&P 500, which is several times better than the index average of about 1.5%. The company has also improved its payouts at a rapid 18% over the past 5 years. Buffett had first bought shares in the third quarter of 2020 when he initiated a $1.86 billion stake of more than 21 million shares, and in the final quarter of 2020, he had added to this figure and position with an extra 4.3 million shares. Merck. Warren Buffett also bought another whopping sum of 6,294,333 shares in the Dow component, Merck. This had happened in the fourth quarter of 2020, though this investment was initiated in the third quarter of last year. This drug giant now accounts for almost 0.9% of Berkshire Hathaway Incorporated's equity holdings. Merck's actual performance is highly owed to the Keytruda. The Keytruda is another blockbuster cancer drug approved for more than 20 indications. What's even more interesting is Merck has a favorable patent setup with no key brands losing marketing exclusivity until 2022. Buying stock in Merck will build an insane amount of beef in the coming years, as the Keytruda drug is also on patent until 2028. The UBS analysts point to drugs like Keytruda, Gardasil, and Lynparza as key growth drivers and the upcoming change in leadership. The CEO, Ken Frazier, will retire at the end of June and CFO Rob Davis will take over. The analysts have predicted that the change will have little effect on these growth drivers and still consider Merck a buy. Merck's dividend is reliable and growing, and their payout had been raising by a penny per share for years, but it's now to beef up for real. Merck upgraded its payouts by 14.6% in 2019, followed by nearly an 11% improvement for 2020. Kroger. Berkshire Hathaway, owned by Warren Buffett, had increased its stakes with Kroger by 34%. Berkshire Hathaway's initial stake in the supermarket beast, Kroger, was entered in the third quarter of 2019, which had raised a lot of eyebrows. It was considered unconventional and perhaps unintelligible to invest in traditional supermarket chains in a world where companies like Walmart, Amazon.com, and other large firms are vying to rule the grocery space. But Kroger is a powerful stoic, and believe it or not, it happens to be one of the largest retailers in the world. Kroger has roughly 2,750 retail food stores operating under such banners as Dillon's, Ralph's, Harris Teeter, and its namesake brand, as well as 1,585 gas stations and about 170 jewelry stores under banners including Fred Meyer Jewelers and Littman Jewelers. Kroger also has an excellent dividend growth stock, upping their game in June of 2020 by 12.5% to 72 cents per share quarterly. This is quite close to its 5-year dividend growth rate of 12%. After the fourth quarter binge, Berkshire is now the fourth largest Kroger shareholder at a 4.4% stake. T-Mobile US. Berkshire Hathaway has almost quadrupled its stakes with the wireless communication company T-Mobile US in the fourth quarter. BRKB, or Berkshire Hathaway, had bought its first share in the telecommunications line in the third quarter of 2019. In a recent purchase, Buffett had grabbed another 2,828,844 shares, which is a 117% increase from the previous quarter. T-Mobile became a much more attractive investment since it closed its $26 billion mergers with Sprint in April of the year 2020. The deal had created a number 3 ranking wireless company whose subscribers are at least within the same hemisphere as Verizon and AT&T subscribers. When we look at the picture, it is hardly a significant position, taking up 0.26% of Berkshire Hathaway's total portfolio value, but a 117% increase shows that Buffett and his lieutenants have warmed up to this telecom stock. Scripps. In September of the year 2020, Berkshire Hathaway had backed up a $2.65 billion deal by the TV station owner Scripps to purchase broadcaster Ion Media. The reward for helping finance this acquisition had been wholesome. Berkshire bagged a $600 million preferred equity investment in Scripps and had also received a warrant to buy up to 23.1 million shares of the communications company. Berkshire's investment gives him a 33% ownership stake in Scripps and accounts for a mere 0.14% of the total value of its equity portfolio. Buffett is obviously on another level, and we mere mortals cannot catch up with his lightning speed. Not on this one, at least. Marsh & McLennan. We have spoken of so many companies Warren Buffett has invested in, but none like this one. Berkshire Hathaway's core operations are primarily found in the insurance industry, despite never being a significant factor in its equity portfolio. The company did dump what was left in its stake of Travelers, an insurance company, in early 2020. The BRKB initiating a position in Marsh & McLennan in the fourth quarter of 2020 had been quite a shocker. Buffett picked up 4.2 million shares, which are valued at, well, merely short of over $500 million. This stake accounts for merely 0.2% of the total value of Berkshire's stock holdings and grants Berkshire control of only 0.8% of the insurance company's shares outstanding. Shares in Marsh & McLennan, which provide various risk strategy and consulting services, are longtime market laggards. Yet Buffett must have foreseen untapped resources. The company also pays a good enough dividend yielding 1.6% at present. Chevron. Chevron, being the only energy stock left in the Dow Jones Industrial Average after ExxonMobil was removed in 2020, is another blue-chip dividend payer sitting in Warren Buffett's playhouse. Berkshire Hathaway had initiated over 48 million shares in the fourth quarter of 2020, valued at $4.1 billion. There are no prospects of huge yields coming forth in the oil and gas industries in coming years, but the purchase of oil and gas is top-notch and would have no dip if another pandemic does not strike us. Chevron had taken advantage of the worst of the industry's enemies in July 2020 by buying up Noble Energy in a $5 billion all-stock transaction. In an industry with heavy competition and dirty players, Chevron remembers maintaining asset quality, which makes them one of the best players out there. Their dividend is an old-time wine in the age of low yield for high tasks and instability. Several oil and gas companies were forced to slash or suspend their dividends last year, but not Chevron. Why not? They have raised the payout for 33 consecutive years, and the management is sure they will protect the dividend at all costs. Berkshire is the energy giant's fifth largest shareholder with a 2.5% share. Verizon. Verizon, being the only telecommunications company in the Dow Jones Industrial Average, is a catchy song on a summer evening with a bottle of wine for refills. Dividend investors everywhere will agree with this. Berkshire Hathaway's portfolio will agree with this. Berkshire and the owner, Buffett, initiated a shiny new stake in Verizon in the fourth quarter of 2020. They had cleared up almost 146.7 million shares valued at $8.69 billion, which accounts for 3.2% of Berkshire's total equity portfolio value. This smooth swoop also crowned Buffett the fourth largest Verizon shareholder, with the first, second, and third being Vanguard, BlackRock, and State Street Global Advisors. Verizon is unbeatable in growth, defense, and reliability, and investors are pretty pleased with their continued growth. That brings us to the end of our video. We hope you had a smooth ride. If you're wondering where to invest some of your wads, here are a few options to go with. Please, give this video a thumbs up, and see you next time.